Hello, good afternoon. Adrian Karczewicz. I'm heading divestments transactions actually in Skanska in Central Europe. Skanska Commercial Development is part of Skanska Group, which is one of the leading construction and development companies in the world. We employ almost 42,000 employees. We have almost 130 years of history. And commercial development business is actually about building mostly office buildings. So this is what is our core activity in the world. We actually cover 3 regions as commercial development. It's Central Europe, it's Nordics, our home market, and it's United States. So this is where we operate. And actually, I am representing CEE. So this is Poland, Czech Republic, Romania, Hungary, and we operate in 10 markets, which is actually 10 cities. So mostly Polish, 7 cities, largest 7 cities, Prague, Bucharest, and Budapest.
Great. Anna.
Good afternoon. Anna Duchnowska. I'm heading Polish office for Invesco Real Estate. Invesco Real Estate is independent investment manager, active globally. We are quoted on the New York Stock Exchange. We have an allocation into real estate of around $70 billion across the globe, mostly in USA, in America. In Europe, we have around $8 billion invested. Out of this, $1 billion is invested in Poland. We're active in all commercial classes of assets, retail, office, and logistics. We have also hotel funds across Europe, and we work with over 100 of institutional investors currently in Europe.
Great. Michal.
Good afternoon, Michal Miecinski. I am of Counsel in the Warsaw office of Linklaters. I'm in the real estate department, which counts in Warsaw roughly 20 people dedicated only to real estate work. And like doing all kinds of real estate transactional work. I'm also specializing in hospitality and leisure hotels. And Linklaters, as you may be aware, is an international law firm with headquarters in London, but with offices around the globe. And from Warsaw, we do also supervise and do transactions in the CEE region. Thanks.
Great, Lila.
Hi, I'm Lila Pateraki. I'm the Chief Investment Officer for Zeus Capital Management. Zeus Capital Management is an investment manager for the Central and Southeast Europe. We have operations in the US as a separate part. We invest mainly in office space, as I said, in Central and Southeast Europe. We've came to Poland very recently, so about a couple of months ago. I hope that we will be here quite soon with an acquisition or multiple acquisitions, let's say.
Good afternoon. My name is Tomasz Tondera. I'm a senior partner with Griffin Real Estate. I'm with Griffin for about 10 years. Recently, Griffin transformed from real estate investor into portfolio and platform manager. We try to be pioneers in many segments of real estate. We set up first REIT-like platform based on assets located in Poland only. Recently, we launched on Warsaw Stock Exchange first REIT-like platform listed on Warsaw Stock Exchange. The first one was listed on Johannesburg Stock Exchange. We are running the largest private student housing platform. We target to have the largest portfolio of resi for rent institutional residential landlord. And some other business divisions. We invest in Poland only. We claim to be one of the largest and one of the most active investors in Poland. We have about 5 billion euros under management in Poland only.
Okay, great, thank you. Maybe, Adrian, just starting with you. we've heard a lot about trends, but what do you see as the biggest kind of investment trend looking at the cities that you're active in across CEE?
I think we have to differentiate a bit what's happening in Central Europe. Right now, what is, of course, I would say the most location is Poland and Czech Republic, actually Prague, out of Czech Republic. So this is I would say the core of activity, which is a core of focus in terms of the interest from different investor types that are actually attracted by these two countries. And of course, we have Romania and Hungary, which is a bit different profile of investors. However, I would say the mutual trend would be that what we see recently is that there is a huge interest coming from Asia. So compared, some of the analysts, some of the consultants actually did this research, and there was like 6 times increase 2015, 2016, when you compare inflow of capital into real estate from APAC countries, so Asia Pacific. So this is actually the trend which we see right now. This is actually something that we follow. We have been on trip to Asia, to Korea. So there is some capital which is attracted and is already placed in Poland by the acquisition of Amazon logistic projects in Wrocław and Poznań. So this is this new trend. However, we see also something very interesting which just popped out recently, and this is acquisition of buildings by occupiers. So we have currently three discussions that we carry in CEE, I cannot say where, in which country, but in Central Europe and Northern Europe for actually owner-occupiers. So big corporations are actually looking to buy their buildings.
Lila, do you want to pick up some of those points? And also, from your experience, because you're also looking across the region, how do you see those markets developing? There's growth rates, obviously, in different markets, but do you see all of the cities developing at a similar pace, or what's happening?
Well, I would say that the majority of the cities are developing at similar pace. It's just that the size is different. So the recognition that development is getting is different. Poland has some 5 million square meters of office space. If I am to talk about Poland, Sofia has 1.2 million.
Warsaw.
Warsaw, sorry, not Poland, Warsaw. So Sofia has about 1.5. So building 100 square meters here 100,000 square meters here doesn't make a difference. Building it in Sofia does. We've seen the growth. We've seen the markets picking up. It started. Poland hasn't changed that much or hasn't gone through a recession. Czech Republic has picked up a lot. Hungary is out there right now with a lot of local capital, creating a lot of fuss about the country. And we started shifting down towards Romania and Bulgaria. I've been told recently that there are, for example, in Sofia, again, I'll mention just because it's the lowest further down country that nobody thinks about, but there are a couple of deals in the order of 100 million euros and 200 million euros that are currently, let's say, cooking and are supposed to be announced soon. Shopping centers have been sold. So we see the interest. Just to answer, short answer to this long discussion is that we have seen the interest. We have seen the cities picking up pace in terms of growth. I think what we've seen in the traditional cities like Warsaw and Prague is also alternative investments, more than we have seen them in the rest of the other cities or in the other countries. So I think that's what differentiates. So we see more of the student housing, we see more of the hotel or the residential being picked up by institutional investors versus what we see in other cities.
Okay, that's interesting. And Tomasz, obviously, you were saying you're aiming to move more towards residential. You're focused only on Poland. So what do you think is driving that growth? What's your expectation for residential? And is that mainly in a city? Is it focused on specific cities, just Warsaw? Or what's your sense of your strategy and what's driving that?
When it comes to residential sector, definitely quality of life and demand for work. And this is directly linked to Poland being ranked #1 in Europe as destination for shared services, which creates dozens of thousands of jobs annually. And attracts young, well-educated people to relocate. As the new generation is much more mobile and much more focused on work balance, work-life balance needs, they are ready to relocate. They are ready to change job, to change the city they live, just to look for new challenges, for new job, or for just to change something, just to change. And we see this as a one of main drivers for institutional residential rental segment to grow. And we would like to respond to this demand with institutional supply of quite standardized offer in terms of quality of apartments, flats, and also in terms of lease agreement, services attached to the flat itself.
I wanted to just check with you, Anna, because obviously Invesco very much globally investing, core investor. You mentioned that you'd got a large portfolio here. How important for you are aspects like the ones we've been talking about in terms of human capital, investability, demographics, appealing to Generation X and Y? How does that feed into your investment strategy, and especially for the region?
We are core, boring investors, so all the boxes have to be ticked, basically. But I agree, the human capital, the access to talent is the driver, the most important driver today. If you look at the standard balance sheet, or rather income statement of any of the corporation, pretty much 80 to 90% of the cost is the salary cost or production cost, and real estate is just about 10, maybe 8%. So obviously the decision where to locate a particular office hub or headquarter will not be driven by the availability of the real estate, but rather availability of the talented pool of educated workforce. And I guess right now Poland has window of opportunity, because we have actually very well educated workforce, very competitive in terms of salary levels if we compare it to the Western Europe. We are in the same time zone, which makes the difference. We are speaking, we can speak different really languages. I was just saying to my colleagues that I've recently heard from one of the CEO of BPO sector that apparently in Poland, right now, around 30% of the people working for BPO services sector are foreigners, which explains the demand for residential to rent, which explains this whole concept of the well-being. So everything is kind of linked. So obviously we are interested in being here long-term and investing here long-term. Also Prague on our radar, also regional cities, major regional cities in Poland. We have acquired one mixed use in Poznań. We have a shopping center in Kraków. We are very active on logistics. Obviously, logistic right now is a hot topic for all the investors, or most of the core investors in Europe, Polish logistics. So there are a lot of opportunities, but definitely all these things around human capital, migration, aging of the population is the driver.
And Michal, this is, I mean, we've been doing these sessions for the last 6 years, and if I'd have said to people 4 years ago in a panel, how important is human capital for you, they would have not had any idea what I was talking about, I'm pretty certain. They would have been obsessed about, you know, they'd have been obsessed about the fact that sustainability was no longer important because nobody could get financing anyway, and that there was, you know. So that's a massive change. And are you seeing that in terms of the people who are coming to you and looking at advice? Is that sort of a part of their judgment about whether or not they should invest in a specific city? Are they thinking about, do I want to invest in Poland, or are they thinking about, do I want to invest in Warsaw? What are you hearing from the client side?
They do. Catching up what other panelists already said, what we increasingly see on our desk, it's ultimately what our clients are doing. So first of all, we see, apart from traditional investments like in offices, retail, logistics, we increasingly see interest in alternative investments, also from institutional investors. So first of all, already like Tomasz mentioned, like Griffin doing their student housings and REITs, which they just initiated. But also like Skanska transaction, like adding up to MySpace or HubHub, their new investment in Business Lane. So we see alternative type of investments, which is increasingly added on to the traditional types of investments. In terms of locations, we see increasingly interest not only in Warsaw, but also in terms of offices and retail in other cities in Poland. Of course, there are some exceptions and regions where institutional investors are not very much reluctant to invest, but still, I think demand is growing. In terms of like source of capital, we see investors from, as Adrian said before, increasingly from Asia, and this is like something new on the market, which a couple of years ago was not existing, but also like investors increasingly from South Africa. And we already had investments, which Tomasz mentioned with Griffin.
South Africans were the second last year in Poland,
exactly.
Just after Germans.
And we were on a trip like a couple of weeks ago to South Africa, and out of this like 3 days trip, we came like with several mandates and also interest and questions about, you know, what happens here in Poland, and like concrete questions for transactions. So this can we of course confirm.
Yeah, go ahead.
Yeah, what I want to say is that apart from the different source of capital in terms of countries, what we have seen, and I don't know how much that will change, it was in one of the presentations earlier about the margin between, you know, bond yields and cap yields, is that we, at least in our case, we see a lot of the non-traditional investors, so the investors that used to invest in bonds, in financial instruments that had disappeared from the market, and decided that real estate was the way to go because at least you have something tangible that will stay there and will never go down to zero. So there is a lot of capital that has come in this region, which is not from the traditional investor type. Whether that will stay or not on the long term, now that the story started to flip around, remains of course to be seen. But I think that makes also a lot of change for the interest in this region as well.
So your concern in a way is that if interest rates begin to tick up and you get bond rates going up, those investors will automatically go back to bonds and take themselves out of the real estate arena.
If not out, because a lot of them have invested, definitely the amount of money that will be allocated to real estate will definitely be decreased.
I think maybe one point that investors on the market sometimes are before the law and legislators and governments. Like Tomasz mentioned, the Griffin Premium RE. It's not still REIT, but again, we have a draft bill on the REITs in Poland for some months already, and it's still being discussed. Nevertheless, like a premature REIT has been already like introduced to the market with good success. So this shows only that investors are already ahead of what legislation is going to introduce in maybe a couple of months. I think maybe one more point on the sectors. What we increasingly also see, what was mentioned here also are the hotels and hospitality. So there is a huge demand on new investment in hotels, also from institutional investors who are ready to invest in a hotel business. And we see new players on the market coming not only from big chains, which are pretty much obvious, but also from countries like Israel, where we see investors ready to build and invest in hotels.
And you've got the new Raffles Hotel, I think, opening?
Yes.
I can't remember
still,
that.
just give you an example. We have, comparing to Berlin maybe. Berlin has currently roughly over 100,000 keys, 100,000 rooms, which is basically, there's a ratio 260-something rooms per 10,000 inhabitants. Warsaw currently has 14,000, which is roughly around 70. And demand in hotels and hotel rooms increases yearly roughly 4%, where the new investments in hotel is around 2%. So there is a still spread of roughly 2%, and even including new investments, which you mentioned, Raffles and all the hotels which are built. And by the way, Tri-City, like Gdańsk, Gdynia, Sopot are the cities where the most hotel investments are being built currently. It's not sufficient enough to cover the demand.
Okay, good.
No, I think just to pick up on the point from Lila about the yields and the bonds. Yeah, so I think the difference between I think the situation that you're describing is actually U.S., where there were a few hikes done by Fed, and there is some impact on the real estate. Yeah, I know from my colleagues in U.S. that the investors are a bit more hesitant to pay the same prices that they were paying last year. However, when you look at particularly EU, when you look at Europe, you could increase rates in Germany, yes, but if you do it in Italy, if you do it in France, you kill these countries. So that's why I cannot see the same situation, the same pattern as we have in US to be actually happening in Europe. If you have GDP of 1.5% growth, there cannot be any increase in terms of the rates.
True, but at the same time, this region, especially CEE, is very relies a lot on FDI. So a lot of the capital that is coming in this region is both US or US based or US whatever driven capital. So it's not just local capital, and it's not just Asian capital or one source. So I think what the change in the mentality globally will affect eventually the region. How much remains to be seen. But I think that there will be a change as other alternative products will become more interesting.
Just to add on that, I agree, but I believe there is a slightly wider problem. Simply, there is too much money on the market, and everybody is chasing the same product. So, for example, if we take any reasonable office to be bought in Munich or in Frankfurt, there are probably 40 bidders, very core bidders, and it's not about really, they are paying crazy prices. I mean, like Invesco is losing, and we are number 20 or 25th usually in our bids. So that's one thing. So this capital is really chasing everything possible. And another comment is that CEE has really a significant premium towards Western countries still. So even if there is a yield shift, there will be still a premium for the investor to come here and invest. So I wouldn't be afraid that the amount of equity chasing Polish or Prague investments or Krakowian investments will decrease in the 3-5 year time period.
Okay, all right. So still long term.
You can sleep safe.
Michal, you want to pick that up?
Yeah, Only agree, just to give you an example, our Paris office just finished an office transaction, closed office transaction for a client with a yield below 2%. 2%, below 2%. And there were like some 50 bidders for this location in Paris. And this is still perceived as acceptable on the market and, you know, a good deal. Like when you compare, like in the world of yield compression, the yields which we have here, so we still have like margin, and this is also the answer why the investors here.
Don't get me wrong, I do believe in the region, otherwise we wouldn't have been here and we wouldn't have just come to Poland. So that's not what I'm saying. What I'm saying is that we need to be skeptical, or at least we need to be cautious. Let's put it this way, in the moves we make, all of us or everybody who is investing or whoever is developing, as to the euphoria that currently exists generally about real estate. So it's not region specific what I'm mentioning, it's more global real estate euphoria, and what you just mentioned about Paris, which fundamentally doesn't make sense. Or US, you see that you're buying at similar yields and financing is more expensive. So how's that logical? So again, I do believe in the region. It's not that I don't believe that investment should happen here, it's just that I don't know how long-term perspective that has or is.
Tomasz, you want to pick that?
2 comments. First, that when the REIT idea will mature in Poland, only this segment can create billions of zlotys this time of additional demand. Again, chasing the same product, and probably with much longer holding period. So the assets that would be acquired by REIT will never or hardly any be available again on the market. So this is one comment, and the other is it should be no surprise that our region is so popular as we still provide the premium when compared to Germany or France or UK, which is not justified, not to that extent. Our commercial real estate market is in Eurozone since ages, as rents are in euro, financing is in euro, all the transactions are in euro, and political risk is, I think, these days is comparable to Western countries. We see the recent elections, we see the referendum ideas. So the premium which we provide to compared to the Western countries is still more than decent.
Quite interesting in terms of the political risk, and I don't know whether, well, you can pick that up, Anna, if you want. I mean, when we were in Hamburg, I mean, a couple of things. One is when we were in Paris, I can confirm exactly that, and even, you know, they were talking about sub 3% and expecting it to go down further. So, and they were talking about deals around the 2%, and they were still expecting it to go down, was their expectation. And in terms of the political risk, when we were in Hamburg, there were a couple of the German funds that I talked to, not necessarily on the panel, who said although they had standing assets, particularly in Poland and Czech, that they weren't necessarily actively looking at new ones. They would maintain that because they felt there was some political risk. So it's quite interesting to see the difference. But how does that fit with Hungary, would be my also view.
I have a different opinion. I mean, obviously, it depends to whom are you comparing. If we're talking about South Africa, probably the stability level is very high. But if we have, like with Invesco, mainly German investors are investing, and indeed, throughout the last 12 months, the first and only question was really political stability, because nobody questions the macroeconomic fundamentals, the macroeconomical situation in Poland. Everybody believes in it. There is a historical trend and strong domestic consumption. The only question, which is difficult to handle, is how stable the legal regime is, and how can we ensure that the regulation regarding whatever VAT, CEE or whatever will not change tomorrow because it brings high level of curiosity and on the market.
Michal, can you reassure Anna or not?
Yeah, these are the questions we are being asked by our clients, by the investors, not only from Germany. Of course, as you properly mentioned, it depends purely from where the investor originates. So if you have a South African investor and maybe you start even yourself, discussing a political risk or instability in the region or in Poland particularly, they say, hey, what's the political risk? You don't have any risk, right? Compared to the region where are we coming from. But like German investors, for example, and these deeply established democracies, they ask valid questions about stability of law. And they are not claiming about, particular like turbulences with, I don't know, VAT, whether it's recoverable or not, how to structure the transaction in one way or another. But they are more concerned about like fundaments. Like we had a conversation with a German fund who came with a very specific question regarding, the way in which the judges in Poland will be elected, whether they and the courts will remain independent, because they said, it's a valid point, administration and how the tax office or whatever administration works, they are dependent on the government, and you never maybe sure that they will not follow the road which is imposed by one government or another. But what they are saying that for them, the measure of security is always the independence of courts and independence of judges. And as long as this is secured, they are fine with risk that one decision or another decision of an administrative body is wrong or must be invalidated, or it's not in their favor. So this is the concern which we are seeing, and to be honest, at least for Poland now, we don't see right answer to that as far as we see the developments which happen.
I mean, quite interesting as well that one of the views, because political risk had been one of the political risk and other forms of risk have been one of the big topics over the last year, really, in nearly all of the sessions that we've done. But that how some of them, given that we were in London and in Paris, but the terrorism risk really didn't account in terms of what was happening in the market. And also, Brexit was obviously there, and everybody could see that as an instability. And you're looking at a window of how long that's going to last. And that was a much bigger risk that was being looked at from there. Some of which was written off by the fact that this is just part of the cycle, but I think there's an acceptance that that's not fully correct necessarily.
Richard, if I can just comment on this, because I was also in London in one of the recent conferences, and I've heard this from head of research in one of the major consulting companies about which cities people would like to live, and of course it was Stockholm, Amsterdam. The most, I would say, sought locations. But then I asked the question, are you taking into account in your research like the personal safety, like the terrorism risk? And she said that actually this is something which is of course on the agenda after the accident or the attack for a week or two, but then it's disappearing. That's why we're not taking this into account. And I was really surprised. I was shocked. Because at the end, I was just also talking to one of my colleagues. He's working for the investment fund from Korea, and he relocated from Seoul to London. And he was very close to what happened just a couple of weeks ago in London. And he's there with his family, and of course, his wife and his kids are thinking, if this was a really good decision to move from Seoul to London. So I don't know why some of this research specialists are not taking this into account, because when you look.
You could grab the other one out.
Because when you look at the statistics, Poland right now, in terms of the terrorist attack, terrorism risk, and all of the different accidents connected to this, is on the last 130th place, together with Singapore, When you look at personal safety, Poland is ranking second after Japan. So these are the things which I think are actually influencing what Anna said. 30% of workers in business service sectors are actually foreigners. This is a very important fact.
So my piece of research works here. So, Adrian, because I was looking for something interesting, and recently A.T. Kearney performed the Global Cities 2017 Outlook. And Poland, so far, if you're looking at the current index, basically taking into account business activity, human talents, infrastructure, is at the level of around 60 countries out of 130. But there is another research, what's the potential outlook for the city, taking into account safety, healthcare, education, well-being, standard of living, and immediately cities like Warsaw and Prague are moving from the around 60s to the level of number 30, which shows that the prospect about Poland, about all the things that Adrian has just said about the safety, the affordability of living versus your salary is very much important these days.
I think it was an interesting point, and I think increasingly that is true. Tomasz?
Yeah, it's reflected in hospitality business. The occupation levels in hotels all over Poland is soaring, and the prospects are only better and better. And Poland, but not only Poland, but our Baltic states are among most popular holiday destination all over the world this year.
And I think it's one more thing, that this is a region that was unknown for a lot of investors for a long period of time, and it's a brand new region if you take into account that's, 20 years old. So things that happened here, I think, gets blown out of proportion a lot more than you would see in the West. So imagine if Brexit happened in any of those countries, we could forget CEE as investment destination. London, what I'm hearing is yields are compressing. So I think that a lot of the political situation has to, or a lot of the political fear, let's say, has to do also with the fact that people are not familiar or are not feeling comfortable with this region, and I'm talking globally now, and therefore they tend to overreact to what they're reading on the news.
Lila, London is London, but I just picked up this today on one of the financial providers of one of the websites that there's 10% of foreigners working in UK, so this like equates to 3.5 million people, and 36% out of those foreigners working in UK, they want to leave UK, and 46% out of this 36% are highly qualified, very well educated people.
I just wanted to do something quick on Brexit. We all know London is a global city anyway, and we'll continue on, and that will all be fine. There will be changes for sure. One of those changes is various other cities all looking to find out whether they will be the ones to benefit from some of these jobs. So far, Dublin has been a winner. Amsterdam was very hopeful when we were there. Paris was incredibly hopeful. Hamburg, sort of hopeful, but thinking it was more likely to be Frankfurt. Or Berlin, actually, was the interesting thing, that they felt that Berlin was about to become a proper capital city again, with mixed, more office, not just an area where it was, creative and IT. So, JP Morgan, looking at Poland, what's the view there? Do you think Poland does have a chance of picking up some of these jobs, whether that's directly related to Brexit or not? Who wants to answer that? Michal.
This is a
as much
question
as you can, anyway. Obviously,
because we all heard about Brexit and the impact of Brexit, and interest in other countries and cities, but frankly, this has been discussion only and debate because nobody really saw, real investments or real move so far. From what we see, what lands on our desk, or we speak to the people, we see at least increased interest in Poland. We meet really senior people from various banks, which you also mentioned, and other financial institutions, which are very serious about purchasing immediately properties in Poland, and particularly Warsaw, but also other cities, and hiring in the next years up to 5,000 people. Having said that, they claim this has nothing to do with Brexit. So we really don't know, what is the real reason for moving here. But I would be surprised if it's not Brexit.
But it's not only newcomers. If you speak to the existing BPOs or the companies which have their shared services or other functions here, I was just speaking to one bank 2 years ago. They had 2,000 square meters. Right now they are looking for 20,000 square meters. Right now, this is the demand. So obviously, Poland is already a beneficiary, I think, out of the whole situation regarding Brexit, which is basically uncertainty. Yes, that a lot of businesses want to move to at least have the second hub in continental Europe. Still stay in London, but have an alternative, and this is the trend.
I can add our own story as Linklaters. We used to have shared services globally in various locations, but also in India. And a couple of years ago, a decision has been made to close down in India and move to Europe. And the shared services, the first shared services, in terms of international law firms, have been opened in Warsaw a couple of years ago. And now we have really, more than, I think, 150 people. And Anna is our landlord, so they know it. We have shared services, we have followers like DLA Piper and other law firms. It's not only impact of Brexit. It's, I think, the general move from other usual suspects like India, for example, and moving it to CEE,
And that's an interesting point, Adrian, because you're obviously developing, building. What's happening in terms of the fundamentals for the occupiers? I mean, we've heard here as well that there's a lot of startups, innovation. Are you building that into the sort of developments that you're doing in the future? What's happening fundamentally with the occupiers? You've obviously got business services, but last time we discussed this here in Warsaw, actually in January, we were talking a little bit more about how that was becoming more sustainable because the value-added services were moving up the scale, and so therefore it was no longer just about low cost, it was actually to do with value.
Yes, as Michal said, simple tasking is going to Asia, yes, to India, and advanced service is actually going to Poland. So the pool of talent that you have in Poland has been recognized worldwide. And it's not only now about the language, the mathematical skills, IT skills. It's about the management skills that you can possess in Poland. And because we are concentrating on Poland, but of course we have to look at the wider Europe, Central Europe, because the same thing is happening in Romania, the same thing is happening in Hungary, in Czech Republic. So you have again, just to give some comparison, in the UK you have 300,000 jobs in business service sector. In Poland itself, you have 250,000 jobs. And we'll reach 300 in 2020, in 3 years. And I doubt there'll be some increase in the UK, so we'll be on par with UK, and this little Poland will be at the same level as UK. So this is showing the magnitude of what is happening in these countries in Central Europe. So this is really fueling the growth of what we represent, the real estate sector. And on top of that, what was mentioned at the previous panels, we are looking at these new types of work service, I would say, areas, work service approach, like WeWork in US, so we have Business Link in Poland, and providing the space for startups, providing the flexible arrangement of space, the place to meet, and of course the place to generate all of the ideas and create the environment for other companies to grow. So everything is interconnected. But as Business Link is concerned, what Michal said, we have invested, we are a minority shareholder. We'll be developing 12 new centers in Central Europe, 10 of them in Poland, 2 of them outside of Poland. And this would be investment of around 10 million euros, creating up to 50,000 square meters of office space. So this is a new trend. So it's about the advanced services that are being provided in Poland. So no longer call centers. Actually, there are still call centers and account processing and all of that. But we are moving into knowledge process outsourcing. So we are moving into from, as you call it in this language of business service sector, from back office, we have moved to middle office. So we're really providing risk management, IT strategies, HR strategies for the whole world. And then there is one more aspect which probably will be kept in Western Europe, which is the front office. So this is about the relationship and meeting the clients. So this is something which you cannot move to Poland or Czech Republic right now.
Okay, good. And Tomasz, obviously you're involved in a number of those sectors, but including the alternative sectors. Is that going to be driving a lot of the growth in terms of cities? Because obviously student housing and innovation and those residential aren't just about the capital city, they're also about the secondary cities next to centers of learning. What's your sense of what's driving those, and is that going to be a driving factor as well for secondary cities across the region?
Definitely, but before I answer your question, maybe one point to the previous topic. Office space is right now a very important HR tool for all these startups, scale-ups, and other businesses. So what we observe now is developers are looking for new solutions, new ideas. Office building is no longer pure office building. We provide additional services from kindergarten, starting with kindergarten and ending with convention, meeting center, fitness services, laundry, coffee on your floor, not only on downstairs on the ground floor, etc. And Q22 is very good example. Linklaters has headquarters there. Invesco bought this building, Echo developed. So we commonly share this idea. Warsaw Brewery would be probably the next example of this joint mixed-use project. We will provide entertainment, retail, resi, and office space in one spot, which will create another destination, another meeting point in Warsaw City. Answering your question, definitely yes. The universities in regional cities are attracting more and more international students, which are, for our business at least, the key driver to create and provide them with modern, homogenic offer of 17, 18, 20 square meters room with kitchenette, with wireless internet, which is the most important by far element of this business. And the international students are less or more price flexible. So 50 euro per month per flat difference doesn't make difference for them and makes difference for us. Definitely cities like Rzeszów, for example, Łódź, Tri-City, which are maybe until these days were not on the investment product map of Poland yet. Right now, with modern student housing project packed in a larger portfolio, of course, not a single estate, can be or can start show up on the investment market of Poland.
Okay, good. Lila, I wanted to come to you just to look at some of the cities we haven't discussed so much at the moment. Bucharest, Budapest, Sofia were ones that you'd mentioned before. What's your sense of how those markets are particularly developing?
Well, they have followed up Poland or Warsaw and then Prague. Budapest has changed a lot in the last 1 year. We did our acquisition a year ago, a little bit over a year ago, and we see a huge yield compression with a lot of investors targeting the city, both local and international. And we see this trend following down to Bucharest and Sofia. So Bucharest has had a very good year in 2014, so it was a little bit ahead of the curve, then slowed down, now it's starting picking up again. Sofia is the same. The difference is that there is a lot less product available. So you cannot have the volumes that we see, for example, in Warsaw or in Prague. Materializing, but there is a lot of development. I've heard actually in Budapest as well about student housing, about the hotel market being extremely hot, and there's a lot of demand from investors there. So also the alternative investments are coming down, let's say, from the north to the south of the region.
And Anna, I mean, we had a question earlier about the kind of Polish diaspora and where were they coming back to. Almost full employment here in Poland. 25,000 people maybe coming from JP Morgan. Where are those people going to come from? Does it mean that, like happened to Dublin kind of 10 years ago, that the Polish people who are working elsewhere, maybe in Europe, will come home in order to take those jobs, or will it mean that there'll actually be positive immigration coming in from the countries outside? How do you see that being solved?
I'm not a researcher, but I guess both. I mean, we can see it in the BPO sector, where we have already 30% foreigners working for this sector. You know, if you compare the situation in Portugal or in Spain or South Italy, with the availability of work, talented people can have much better life in Kraków or in Wrocław or in Warsaw. That's why they are moving here. Those cities are pretty international, although local governments could probably do much more to promote the cities abroad, really. But the quality of life is no different from what you can have in other capital cities in Europe. And I think this safety issue is getting much more important right now. That we don't have these terrorist attacks, that we are pretty regarded as a safe country.
Okay, good. Adrian, I just wanted to pick up with you because I know that you've been on a trip recently to both Asia and Canada. In terms of the institutional capital that you were meeting there, which countries were they interested in? Was it solely Poland, or did it move further away than Poland into Czech and into Bucharest and Budapest? What was your sense of what they were telling you?
Actually, from both Asia, which is in particular Korea and Canada, the interest is mostly towards Poland and Czech Republic. And from Poland, they want to start, as most of the investors from Warsaw. and Czech Republic from Prague. But again, I'm talking about office investments. And the specific of the trip was that we were meeting end investors. Yeah, so of course some of these investors are well known to Invesco because they are indirectly investing through, for example, Invesco or JLL or any other fund managers. However, it is interesting to know from them that they are very much opening their pockets into more and more investments in these two countries. And unfortunately, this is not so much connected with Hungary and Romania. So for now, for time being, Romania and Hungary is not on their map. But Poland and Czech Republic definitely. This will be more of activity coming from these two countries. However, coming back to just Bucharest and Budapest, I think what is important, what Lila mentioned, that there was a quite big drop of yields in Budapest, and Bucharest is still outstanding. When you look at Poland or Warsaw, 5% or close to 5% prime office yield. Prague even going below 5. Florentine was 4.8 or something like that. Actually bought by Chinese guys, and Bucharest is 7 to 7.25%. So this is something which is really for me at least a kind of a difference, and it's hard to digest that and explain why this is actually happening, because you have the same tenants, the same covenants. The political risk in Romania is, I wouldn't say different from the risk in Poland or Hungary, and still Romania is behind.
Good. I've got one very final question, which is, which cities do you think offer the best investment prospect at the moment? Whether that's because they've got a big buzz about them, whether it's wellness, whether it's cost of living, all of the things we've heard about, which offer the best investment prospect? Let's start with, you can stay within Poland if you want, Tomasz. Which ones offer the best investment prospect?
I would rank Tri-City number 1 and Łódź number 2.
Okay, good. Lila?
Well, I would have to say Warsaw, otherwise I will never leave this room. But regardless of that, yes, I do believe Warsaw, and at the same time, I'll agree with Adrian about Bucharest. It's a city that has been undervalued. It's less known. It has been hit in 2007 significantly by the crisis, and I think that answers the question of, it's considered an illiquid or not so liquid city. But if you are a long-term investor, because I think that also plays a role in the answer we're giving you. So if you're a long-term investor, I think Bucharest and Warsaw has a lot of potential. If you are short-term, then you're definitely staying with Warsaw and Prague.
Okay, good. Michal?
In Poland, Warsaw, Tri-City and Wrocław, and elsewhere I would say Prague, Bucharest, and picking up what we also see on our desk is Budapest.
Great. Anna?
The same. Wearing Invesco had Warsaw, but being Polish, Tri-City, definitely Tri-City.
Adrian?
I'm glad to hear, Tomasz, that you like Łódź, because for me it's also a rising star, especially on the office market. But if I were to put my money, I would still go to Bucharest.
Okay, Bucharest. Okay, very good.